For the new Inflation Reduction Act in August 2022, one of the new acts is the Clean Vehicles Credit for 2023. So for the Clean Vehicles Credit is the new plug-in vehicles credit. So you can get up to $7,500 for non-refundable credit. What that means is that if you have a tax liability of $10,000, it will help you reduce to $7,500. If you have a tax liability of $6,000, it won't give you the refundable of $1,500. So for the Clean Vehicles credits, you have the options to transfer the credits to your dealers. And for the dealers, they might give you the cash rebates as well. If you are thinking about getting a new vehicles, plug-in vehicles for 2023, and you want to know if you qualify and what are the limitations, please stick around. So there are some income limitations. So for your prior year and current year tax year modified adjustable gross income has to be below $300,000 for married filing jointly, $225,000 for head of the household, and $150,000 for single or married filing separately. For the car itself, the manufacturer retail price cannot exceed the following: $80,000 for pickup, van, SUV, $55,000 for any other vehicles. This credit may also eliminated for tax credit caps for any vehicles that sold more than 200 EVs units, so making the GM Bolt, Tesla Model 3, and Toyota Prius once again eligible. So IRS website stated they will have more updated information by the end of 2022. And here are some other requirements. You have to be original owner of the new plug-in vehicles. The vehicles has to be under 14,000 pounds, and the car itself is not purposely for resale. And the vehicle's final assembly has to happen in North America. And also you need to get a report from the dealer. So a report includes your name, tax identification number, tax return needs the VIN number, vehicle's battery capacity, verification that you are the original use of the car started with you, so you are the original owner, and the maximum credits, how much you can get under this section. And here they also emphasize on two elements: the battery requirements and also critical minerals. So for battery requirements, it draws electricity from a battery with a capacity of at least 7 kilowatt hours and can be recharged from an external source of electricity, and not include applicable critical minerals. So in a battery were extracted, processed, or recycled by a foreign entity of concern. Another credit is the 25E used clean vehicles credits for used plug-in vehicle. You can get up to 30% of the purchase price or up to $4,000. And here is the modified adjusted gross income limits: $115,000 for married filing jointly, $112,500 for head of the household, $75,000 for single or married filing separately. And also your prior year tax modified adjustable gross income cannot exceed the limit as well. And you cannot be somebody else's dependent on their tax return. So let's say your mom and dad claim you as a dependent, you are not able to claim this credit. Also, for the model year of the vehicles has to be 2 years prior when you purchase the vehicle. So let's say if you purchase the used vehicles in 2023, the model year has to be 2020 and earlier. And you must not have claimed these credits during the 3 years preceding the purchase of the vehicles. The taxpayer need to use the used car predominantly in the US, and the dealer sales price of the car has to be less than $25,000, and the car itself not to use it specifically for resale, and the car has to be purchased from a dealer.